We apologize for the delay that's happened due to some technical issues, but then yes, welcome to the webinar. Now here we are having a webinar, for all our customers who want to understand the NHIT NCD, which is due to open on Monday. And we all hope that this webinar will help you understand the issue very well and will help you to take the right decision when you are investing into this particular entity. So, I have Mr. Deepak Jasani, who heads the retail research here in HDFC Securities, and I have his colleague Atul Karwa, who is a part of his team. Now, they will take us through the entire the insight about the NHIT. We'll start with Mr. Deepak Jasani sharing his views about this particular NCD. Mr. Jasani?
Yeah, good morning and welcome everyone to this webinar. After a long time, we are seeing some action on the debt front and a new instrument. Although the instrument in terms of NCD has been popular for quite some time, but now this is for the first time that National Highways Infra Trust is coming out with an NCD issue. So far, the NCD issues were either from companies, corporates, PSUs, etc. This is the first time that an InvIT has come out with a NCD issue. InvIT has, as a structure, has been popular for some time now. NHIT, being the largest road builder in the country, has also started sort of monetizing its assets by setting up this InvIT. This unit was set up in October 20 and the assets were transferred in November 21. So now the funds requirement for the InvIT is partly met by this NCD issue. And again, one more unique thing, or the first time thing, is that it has three parts: STRPP. First time, so and these three portions will be separately listed, and they have different maturities. So any investor can sell any of those parts at any point of time. Any investors can come in at any point of time and invest in any of those three parts. So those will be separately listed and traded, and depending on your investment horizon, you can either continue to hold, exit, or buy fresh from the market. So this is something unique and for the first time, I think, in Indian conditions. And so 13, 18 and 25 year, there are three maturities of these three portions. There are four categories and a lot of other data details. I think my colleague will take us through. So now over to Atul. Atul, your mic.
So very good morning to all our investors. So I will take you through the brief details of the issue. So as Deepak sir said, that NHIT has for the first time come out with a NCD issue an InvIT. So this NCD will open on 17th of October and close on 7th of November. So this is a first come first serve issue. So if the issue is fully subscribed before the 7th of November, it might close early as well. It has been rated AAA by Care Ratings and India Ratings and Research. So the main objects of the issue is to raise funds for the development, operations and maintenance of road infrastructure assets. So NHIT has transferred 5 assets as of now to the InvIT, and 3 more will be done in the coming year. So the issue is the issue size is the base issue size is rupees 750 crores, and there is a green shoe option of oversubscription aggregating to rupees 750 crores. So the total issue size would be around rupees 1500 crores. So this issue has been divided into 3 parts. Each NCD will have 3 parts, A, B, and C, which will be of rupees 300, rupees 300, and rupees 400. And the A part would mature in 13 years, the B part in 18 years, and the C part in 25 years. The face value of the NCD is rupees 1000, and the minimum subscription size is rupees 10,000. That is 10 NCDs. So you will get 10 parts of A, 10 parts of B, and 10 parts of C on the minimum application. So this issue will be listed on both BSE and NSE, and each part would be tradable separately. And the issue there is a market size. 25% of the issue would be reserved for QIBs, 25% for institutional investors, 25% for HNIs, and 25% for retail individual investors. So that was the basics of the issue. Over to you, sir.
So now, what does this issue offer? Basically, issue offers 7.9% fixed interest semi-annually, which works out to 8.05 effective yield. And now, whether one should invest in this or not, a lot will depend on whether the interest rate cycle has peaked at this point of time or not. So a lot of people feel that we are close to the peak of the interest rate cycle, not only in India, even abroad. There may be one or maximum two more rate hikes from here, and they are probably already discounted in the interest rates which are prevalent in the economy. So in that sense, if we don't have too many rate hikes going forward, this may be closer to the peak of interest rates. Now, if you invest in these NCDs, then you are locking in these interest rates for a very long period of time. Now, that is a big advantage, because typically you don't, as a retailer or as an HNI, you don't have access to long dated paper. You have papers, you have fixed income instruments available to you, which for say between 6 months to 4 or 5 years. 13, 18, and 25 years papers are rarely available, and that too from a AAA PSU InvIT. So that is one big advantage that we will have. Of course, if the interest rates keep on rising from here, then for some more time, then one may be a little dissatisfied for the interim. Overall, over the medium term, the interest rates are slated to fall. They cannot remain at these high levels for long. Then secondly, if you are not in the highest tax bracket, now highest tax bracket including surcharge and everything is about 42%. So in case you are not in the highest tax paying bracket, then this is attractive. Because otherwise your 7.9% becomes about 5% post-tax, which is not very attractive in that sense of a term. So even if you are in the 33% or 36% bracket, this may still be attractive. Senior citizens who want to invest in safe instruments and fixed rate instruments for a longer period, for them also this is a very good opportunity to invest. And there are a lot of people who have some portion of their overall investable corpus invested in debt. So for them, a portion of this allocation can go into these instruments, because these don't need to be reshuffled or reinvested every now and then. So you don't carry that reinvestment risk. So in case you are investing in say a 3-year or a 5-year instrument today, and when the instrument matures, the interest rates are much lower, then you have the risk of reinvesting those money at a lower rate. So to avoid that kind of a situation, these long-term paper are attractive. As far as listing and liquidity is concerned, I think Bharat Bond series are already listed on the market and they are quite liquid. A lot of volumes keep happening there. So initially we may see some time to be taken before the liquidity is seen in this, but once after say couple of weeks, we will be seeing a lot of liquidity in these scripts. So you can enter and exit easily. That is our expectation. And there a lot of traders will also come and keep trading in this papers based on the interest rate moves. So in case the interest rate falls between now and 3 months 6 months from now, a lot of this paper will give appreciation because the yield, the bond prices and yields go in inverse direction. So if yields fall, the bond prices will go up. So people who buy now, and once the interest rates fall, the bond prices will rise, so they can exit at a profit. So that uh, uh, activity will be carried out by traders, and they will uh, bring a lot of liquidity for the NCD, for the NCD, three parts of the NCD. So that should not be much of a worry. Yeah, so broadly, I think there is no TDS on this because it is in demat, and so QIB, I think there's a lot of interest of QIBs. There's a lot of interest by institutions. HNIs and retail, I think also may get subscribed soon in a matter of few days. So in case, so you will have to make up your mind as to whether you want to invest. In case you want to invest, then you should do as early as possible so that you are able to get some allotment. Yeah. So that's all from my side. Sharmila, you want to add anything, or do we take some Q&A later? Hello, Sharmila? Hello.
Sharmila, you need to unmute.
Hello.
Yeah, Sharmila, speak.
Yeah, sorry. Mr. Jasani, can you rephrase your question again?
Yeah, so
Hello.
I finished my portion. So you want to add anything, or we can take some questions?
Mr. Jasani, basically, since this being a triple A and with a semi-annual and with such a long term, this definitely is a great investment, is what I feel for people who are looking at a long-term, fixed, secure, matured, paper or an investment. Now here we have retail, which is from 10,000 to up to 10 lakhs. So a retail customer who wants to invest can do that in the range of minimum application of 10,000 up to 10 lakhs, and above 10 lakhs is your HNI category. In case if corporates or trust partnership firms, they do want to invest, then we have a investor, non-institutional investor who can apply under that category. Now, the entire issue being 1,500 crores, where 25% is allocated for each category. Mr. Jasani, can you share some insight about what could be the overall subscription? Because what I am expecting is, and what markets are expecting, the way people are talking about this and looking at this, we will see an oversubscription day one. So, would you want to add any of your insights to that, Mr. Jasani?
Yeah, I've already covered that. And about oversubscription, I think you are a better judge. But anyway, as I said, the QIBs institutions will get oversubscribed very fast. HNI and retail may take 1 or 2 days or 3 days max to get oversubscribed. So that
Yes.
is the question. Now we have some questions. One is, do you have cumulative options for these debentures? I want interest compounded and repaid at the respective tenors. I don't think we have cumulative option available, right, Sharmila?
No, we don't have. The structure is fixed by the company. There is no differentiation into this particular structure.
So there will be interest will be paid out semi-annually. You cannot have it compounded
Correct,
because
exactly.
otherwise they will have a lot of different series, ISINs and etc., which they want to
Yes,
avoid. They
and
want to.
yes, in fact, there is a part principal payment also which will happen from the 8th year onwards. So by the 25th year, you will have your entire principal going back to the customer.
Correct.
So it's a structured product which is defined. There could be no other combinations that can happen in this.
Correct. And a lot of these details are available in our note, which is available on the website. So in case anybody wants to sort of have better clarity, they can go through the note. Now, the second question is, can we choose the tenure? Again, tenure are fixed, three portions, 13, 18 and 25 years. So you cannot say, I want only 13 years and I don't want 18 years at the time of application. Later on, when they are listed, you can buy the respective ones separately. But at the time of application or allotment, you will have to get all three together. So you don't
Yeah.
have option of say,
Yeah, can I add also to
yeah,
this? Now, whenever you are investing your amount, that will be divided in the ratio of 3:3:4 as per your face value. Now, at that particular point of time, if you do not want a particular tenure, which you feel may not suit you, or where you feel it is not mandatory for you to keep it, you may want to sell it in the open market, provided there would be buyers available for that particular tenure. So each will be traded separately. The 13 years, 18 years, and 25 years will be traded separately, listed separately on the exchange. So after your allotment and after the listing, you may want to move out, provided there are buyers, there is liquidity in the market.
correct. Then the next question is redemption details. Now that is shown on the screen. We have given a table as to how the redemption will happen for all the three portions. So that is clear from there. Then what is the face value? Face value is, I think, 1000 divided by 300, 300, 400. So there are three portions of the instrument. Can an investor without holding DMAT can invest? No. DMAT is compulsory for applying for this NCD issue. Any special dispensation for senior citizens in the interest rates? There is no separate additional interest provision for senior citizens. Everyone will get the same rate of interest. What happens if there is oversubscription? How will the allotment be done? So allotment will be done on first come first serve basis. So at the end of every day, they will sort of check as to whether 100% application has come. So in case that has happened, then the next day applications will not be considered and such like. And within the first day, again, if it is oversubscribed on the first day itself, then there will be a lottery system or proportionate allotment, I think, right, Sharmila?
Yeah. Can I take this question?
Yeah,
Yeah, okay. So the allotment basically happens now, say day one, if you have the oversubscription, so it would be pro rata for everybody who has applied and bidded this particular application day one up to 5 p.m., where the exchange is open. Now, in case if there is no oversubscription on day one, or even if it is oversubscribed day one, you will have the company putting it into the newspaper, because it is mandatory to announce a pre-closure. So we will have this open day 2 and day 3, but there will be no allotment that will happen in this particular issue. So it will be first day over subscription is pro rata in case if it happens. But we see that retail may not get oversubscribed, may get oversubscribed day 2.
right. Now, so I can't buy 13 years only. Yeah, we have replied that question. So you will have to buy all three, especially if you are applying in this issue, you will have to buy all three. If you want only one, then you can buy from the market post listing at whatever price it is available. Is
Okay.
exit available?
Yeah.
Ah,
Mr. Jasani, let me rephrase that again for the customer. Whenever you are applying your entire amount. Say, for example, if you are applying a 1 crore application, you are applying the entire 1 crore application. The allotment happens in 13, 18, and 25 years. So you don't have the option. You only have the option to apply once. The allotment by the company or by the registrar will happen in that ratio, but exit option is available after the listing.
yeah. The next question is exit available after 3 to 5 years period? Any other redemption or liquidity option, please? So now again, exit option is either on maturity or on the stock exchange. So this will be listed, so you can exit anytime. You can exit on the post listing any day. So you can exit on the first month, second month, first year, second year, fifth year, whenever you think you need money, or whenever you think the portion has appreciated sufficiently, you can exit. There is no bar on exiting at any point of time. But the InvIT is not going to buy back before the maturity dates. So as per the maturity dates mentioned, they will keep buying, uh, and there is no prior encashment available from the InvIT. If I get allotted for 3 lakhs, then each 1 lakh will be made as 13, 20, and 25. No, 3 lakhs would mean 90,000, and 1 lakh 20,000. Not 1 lakh each, because 30, 30, 40 is the proportion. So 4 lakhs are 90, 90, 1 lakh 20. 1 lakh 20 will be 25 years, and the rest two will be 13 years and 20 years. Is there any lock-in period? Can I exit once listed? Yes, you can exit on day 1 of listing. There is no lock-in. You can sell whenever you want. So that is the good part of it, and there will be
Yeah, and
sufficient. Yeah,
yeah, and listing will happen for all the three ISNs together. So they will list. They will be separate ISNs for all the three.
yeah, and you can sell any of them. You can sell all or any of them, depending on your preference. Yeah, I think we have done with all the questions. You have anything else to add, Sharmila, or we can close the. When is the tentative listing date,
So
Sharmila?
now generally, see, it would depend when this will close, because though the issue is open for 1 month, but we are expecting it to close on day 2, day 3. So then, in case if it closes on day 2, day 3, we will have the listing in the next 7 to 10 working days.
Okay. And will there be buyers available on exchange for liquidity? Yes. That is what we said. Maybe initially it may take a couple of weeks for the liquidity to happen, but there will soon be sufficient liquidity available. And sir, interest will get monthly mode or quarterly? It is half yearly. No monthly or quarterly, only half yearly. Okay. So 25-year
Um,
tenure. Yeah.
Yes. Now, whenever the customer wants to apply, Mr. Jasani, he has two options. Either he calls the RM and tells him to place the order, or he goes online. Now, the online system for HDFC securities will be open on 17th of October at 12 p.m. So, any time from 12 p.m., the customer may want to apply for this, may do it online, or he may just have to call up his RM and place the order. Now, please remember that due to the oversubscription and due to the first come first base allotment, uh, we would request everybody to get in touch with their RMs as soon as possible for more clarity. And
Correct.
also, yes, and also one more thing, NRIs are not allowed to because
Okay.
NRIs, may not have the option to apply. Minors can apply provided they have their guardians. Then we have the corporates, trust, partnerships. Everybody who will be able to apply, HUF will be able to apply, a normal retail customer. But only NRIs are not allowed in this particular issue.
Yeah, we have given the categories of who can invest and who cannot invest in the note. So you can go through that. Now, what is the capital gains treatment? Now, capital gains, in case you exit prematurely at a profit, you will have to pay capital gains tax on it, depending on the profits that you make and the tenure that you held on to. If you are holding for more than 3 years, it will be a long-term gain. Less than 3 years, it will be a short-term gain. And does the bank provide loan against the instrument? So ideally, the bank should provide, but there is no guarantee for that. This is a AAA, PSU, NCD. So normally it depends on bank to bank, but I think banks should not have too much of an issue in giving loans against this instrument. Yeah. Then right. Now, Sharmila, you have any closing remarks, or we can?
Yes, in fact, I would really like to thank everybody, and I hope this session by Mr. Deepak Jasani and his colleague Atul has been really an eye opener about such a well structured product by the government. It's a AAA. People, please remember a AAA secured government issue. Very rarely you will find this particular coupon rate, which is 7.90. Requesting all to take a look at this particular product. In case if you wish to, we have the online platform open for you, or a relationship manager or our call and trade centers which are open. You may call our call and trade center and request them to place an order. For any other queries, you may, or you are free to call in our customer care, or you are free to call in your relationship manager, or you may want to get in touch with anybody from HSL. We are all here to help you. So all the best, guys. I would request everybody to take a very decisive decision when you are investing into this particular issue. Thank you. That's all from my side.
Okay, thank you.
Thank you.